Per usual, living on this channel is for educational purposes only and is not intended as financial advice. So I really don't have too much to say. Most everything has mean reverted or on its way to fully mean reverting. Trend momentum has reset or trying to reset all over the place. The question now is, will the pendulum swing completely bearish? What can we look for? What can we watch? That's what I have for you today. So looking at market caps, one thing that's interesting is there's this argument where we are less correlated. Crypto's less correlated with itself when we're in a bull market. When you're in a bull market, there tends to be movement of a single coin versus a group of coins. And we're certainly seeing that here on this mid-high cap cluster scrum with BCH Link, BNB, LTC, EOS, Tron, ADA, XLM, XMR, kind of all doing their own thing, which might look bearish to some people, but statistically it's bullish. So we're actually better off. If anything, if you're looking for like, what are we in a bull market? You know, if you're not sure, is this DeFi bull market? Is this a sushi bull market? Did Chef Nomi kill it all? Did Sam save everything? You know, if you're not sure, you can look at statistics like this and say, okay, these coins are kind of acting independently regardless of what's going on. I mean, Tron was up 25% on a day when everything was down 10 to 30%. Like, it didn't make sense. So I think it's clear that we're still in a bull market, regardless of where we're kind of sitting on trends. Altcoins are still beating the pants off of BTC on dominance, and I think market caps are garbage. Okay, just saying that up front. I think dominance is garbage. I look at both because other people look at it, but the denominator is continually being added to in dominance. So of course it's going down. Like, if we're adding coins every day, if we're adding Sushi 2.0 and YFI 50,000.0 every day, of course this is going to go down. Like, there aren't more BTCs, right? So it's kind of a silly metric. It also helps gauge market sentiment. For me, it's kind of like stupid money, dumb money. Retail money entering. If this is pushing down, usually there's a reason for it. If it's ICOs, if it's DeFi, yield farming, Ponzi garbage, whatever it is, there's usually a reason for it. So it's at 61%-ish. Not really a tradable metric, just something that's interesting to watch. Something that is tradable is the CME futures contracts expiration dates. The next one is at the end of the month, September 25th. Q3, again, is not typically this bullish. It's usually bearish. It's usually flat. It's usually slightly negative for BTC and ETH. So to see both this bullish leading into September was a bit of a surprise. The other thing about September specifically is it's the third worst month for BTC, behind like January and March. So April's really good. September's really bad. Q4 is historically good. So if you're down in the dumps, depressed about Q3 September, just look at the light at the end of the tunnel. If anything, this is setting up for some dip buying leading into Q4. That's how I'm looking at this and playing this. We didn't really have much volatility on August 28th, surprisingly. Like, we dumped after that, but you know, I kind of expected a little bit more volatility leading into that for BTC specifically, but it just didn't happen. Looking at legacy, and I think this is really a big part of the story as well. We have ETH, DeFi, sushi, millions of dollars being sloshed around by the minute. But we also have legacy sort of slowly collapsing, imploding, tech stocks pulling back. VIX is above 30, 28, 30, 35, whatever. If VIX goes up, crypto goes down. That's just how it is. You may not like it. VIX is the volatility index of legacy markets. You may not like it. I don't like it. I don't want to be correlated with anything, right? Like, this is the correlations between SPX and NASDAQ. Over time, historically, very little continued correlation. This year, there's been a ton of correlation with both. We're actually negatively correlating at this point with both. But at the end of the day, again, if VIX is up, crypto is down. That's just how it is. So VIX has yet to settle below 20, and it's perking its ugly head again. So expect some more down based on that. Expect downside volatility, expect dip buying, all that stuff. Now, if VIX spikes past 40, 50 again, I mean, we could see another one of these crazy down days, like just out of the blue, because that's what happens when the VIX spikes. So you heard it here first and last, folks. Just watch for that. I've also been watching Tether, which has been holding above $1 still, surprisingly. I say surprisingly because even though we're bearish here, we're still above $1, which isn't what I'd expect based on previous patterns. We didn't get a big spike like we did in March. You know, I don't think it takes a massive liquidity crunch for that to ever happen, but just watching this, if this flips below $1 and we're like on thin ice here, you know, I'm not exactly optimistic that we're going to just suddenly reverse. Just because since March, bullish has been above $1, bearish has been below $1. And even this wasn't really bearish, it was just sort of sideways, but something to watch. Inflows, outflows, USDT above $1, below $1, that sort of thing. All right, let's start with some high time frame. One of my favorites, the 2-year MA multiplier. Bottom side here is at 7.5, and the top side is, you know, above 33K. That's all that really matters. We're not close to the top side. We're closer to the bottom side. So to me, I read this as anything below 7.5 is a dip buying opportunity, just as it was all 3 of these times over the past few months. Certainly dip buying here, dip buying here. It doesn't feel like it when you're in it. You know, when you're at BTC 200, you're thinking, is this a failed experiment, right? When you're at BTC 20K, you're thinking, this is it. This is how crypto takes over the world. But this indicator is here to tell you, no, these are for buying, these are for selling. So when we're above 40 or whatever this curls up to be, that's when this hits the selling opportunity. It's more likely probably we're going to hit 7.5 of 440 based on where this sits. And this white line is just the median between the two. I don't know if we go to 7.5. I'm just saying if we do, that's the buy based on this indicator, which has been solid historically since 2013. Looking at the daily cloud, again, I talked about this last episode. We are not in cruising altitude. We're not in 30,000 feet. We are in the clouds. It's unclear. It's uncertain. Awkward teen emo phase. This is your black period, your blue period. We're trying to figure out our life. The trend has really not even started on the weekly. As crazy as that might sound, the real bull trend has not started on the weekly. You want to see this. You want to see TK lines above cloud. You want to see price above cloud. We keep weaving in and out of the cloud. And you're going to see a lot of volatility when that happens. A lot of uncertainty. It's hard to trade because it can go anywhere. You know, we can go to 8.5, which is where the Kijun is, or 8.1 actually. There's a lot of confluence for 8.1, which I'll show in a second. But this is a big if this then that decision tree. This becomes a singular decision tree once we're above the cloud. Then you just long, and that's it. That's it. You know, that's your trade. That's my trade. The trade. Right now the trade is who knows because it's in the cloud, indeterminate. And the daily, sadly, is flipping mostly bearish here with price inside the cloud. At this point, I had a bunch of people tagging me about an edge-to-edge trade. Certainly possible that we dip down to 9.3, previous consolidation period. I'm not betting on it just because 10K has been super strong, held pretty well so far. But trend-wise, we are very likely to flip completely bearish, which actually makes it cleaner on the way back up because you don't get these situations where you say, do I buy the higher highs? Do I wait for a better opportunity? This next buying opportunity will smack you in the face because it will be just as obvious as it was in April, just as obvious as it was in July when we had this bullish TK recross above the cloud. I actually like this better. It's just a cleaner signal than did I buy higher highs? It's a way above the Tenkin. What do I do? You know, whatever is happening now is for the better. Trust me. Trust me. So will this break 9.3? I don't know. Will this go to 9.3 and then immediately bounce to 10? I don't know. It's in the cloud. Anything's possible. Indeterminate, right? People hate when I say that, especially. People hate not having an answer, but that's statistically what I'm looking at here. We are in the cloud. This is a no trade zone. If we zoom out again and look at the 200 with a pitchfork here and volume nodes, we're basically at the 200, kind of at this VPVR level. The next rung down would be this pivot at 8.1 with this VPVR level. If we break 6.2, it's kind of game over and we all go back to McDonald's or Burger King. I don't think that's going to happen, but 8.1 would be the level to watch if 10K breaks. I think it's 8.1 easy based on weekly Kijun, based on yearly pivot, that sort of thing. Upside's going to take some time. It should be obvious based on cloud. Again, this isn't like a 3-day reversal situation. This is going to be a 20 to 30-day reversal situation, probably end of September, probably post CME rollover on futures on the 25th. That's what I'd watch for. So right now, for the most part, I think a lot of people are just chilling, not forcing a trade here. Just retrospectively looking at this head and shoulders again, it hit the 1618. Sometimes it goes completely to the measured move, which was the 2 on the fibs here, just in case you think I'm crazy or head and shoulders don't work or chart patterns are garbage, whatever, I don't care. My job as I see it is just to show the evidence, lead the trader to the water, let them drink. You can pick some arbitrary horizontal here, but it all kind of ends up in that zone as far as where we are sitting currently. One reason I like a bit of a bullish reversal here is because there's clearly a building bullish divergence on the 6 hour, whether it's a falling wedge or acts like some sort of falling channel, whatever. There's definitely some bull div vibes going on. One way to play this would be to set bids around 9.8 or lower with a stop around 9.4, 9.5. Because what you don't want to do is start buying 9.8 or lower and set your stop at like 9.7, and then you're out on some spike, poor liquidity, whale dump, like some stupidness, right? You don't want that. 9.4, 9.5 is definitely the 1.272. So at that point, you can say, all right, the trade is over. It's obviously not a falling wedge at that point. It shouldn't even get close to 9.5 if this is going to actually reverse. So that's just one way to play it. I do like how it looks just based on the divs here. And the 4-hour cloud, 6-hour cloud, it's all pointing back to 10.8 or higher if this does reverse. If this, then that decision tree. All right, let's switch gears to ETH. This is the weekly cloud. Again, it's in the cloud. Yes, we want this edge to edge, but at the same time, it's indeterminate. I said last week in the video, like if this goes to 250, I could say retrospectively, well, there was the key June, so that wasn't really that much out of the question. Is that technically tradable? I don't think so. Like, do I want bids on 280 here is the question. 288, whatever the key June is. I think that's up to you and your leverage situation, but it's certainly a viable option, buying 288 and expecting 450 to 750. The flip side of that is 288 fails and it just goes right back to 210, 220. I don't see that happening, but if this DeFi stuff continues to deleverage, anything is possible. Literally anything is possible, which is one reason why it's really hard to trade this, not even from a technical perspective, but just a fundamental news perspective. You're getting some DeFi dev just dumping on the market, and then the next day you're getting some FTX CEO saying he's going to pick up the pieces and put it all back together. And the market seems to like what happened there. So, this is difficult to trade. It's hard to be confident in any position. What I do like is just like the weekly BTC cloud into 2021, which is a long time from now. We may or may not have a new president by then. Anything is possible, but leading into 2021, I like the bullish picture this is painting as we get the bullish TK cross with price above cloud. Again, that's the golden trade opportunity on the weekly chart to see that as far as the long signal. And this aligns fundamentally with ETH 2.0 phase 0.00, whatever, it doesn't matter. If it's coming or not, I think there'll be enough hype into 2021, into December, January, where they like to release hard forks and whatnot, that it aligns well with the TA here. Looking at the daily cloud, just like BTC, the signals are all over the place. We're below the key June. We didn't get a key June bounce. We're above the cloud. It's just, this is not any place I want to take a trade ever, right? Like there's no edge to edge here to even that's worth taking, based on risk reward. Everything here screams to me 20 to 30 days, honestly. Let everything reset. If this goes below cloud, so be it. If the TK cross recross happens, so be it. But that's really what you're waiting for. You're waiting for the signals to align again cleanly, either with a bullish Kumo breakout or a TK cross recross, price above cloud, whatever. The BTC signals will be cleaner, most likely, just because they're already more neutral to bearish than ETH is right now. But if ETH acts like a bear flag and keeps going, then you'll see everything flip bearish. And then the signals will be clean if and when we flip bullish again. But based on the trend, you can't evaluate this with any confidence and say this looks one way or the other. It's certainly more bullish than bearish, but it's not tradable to me. I don't see a trade there. I do see a trade here on the ETH pitchfork though. Again, if we zoom out, put the 200 on here, put on VPVR, put on pivots. I really like this 280, 290 level. You got your yearly pivot, you got your VPVR, you got your 200 EMA, you got your median zone of the pitchfork here, this maroon red diag. Theoretically, all of this could be a buy zone. I think the risk reward is fine as far as trend expectations. I think this pitchfork is real enough at this point. It's been a year, right? A year and some months since this has started. These diags look pretty real to me. It's interesting that we bounced from where we did, right on the median line of that pitchfork. So it all looks good to me from a risk reward perspective. Anything below 300, above 260 looks fine. And then again, looking at this head and shoulders retrospectively, we hit the 1618 to 2 measured move zone. Just throwing it out there. It's not voodoo. It's not crazy. It's just math. This was a failed head and shoulders, and then I failed head and shoulders. You virtually never see that ever. That'll never happen probably ever again. So keep that in mind. That is a complete anomaly. Extremely hard to trade because we break this shoulder and you're like, oh, we're good, right? Bullish continuation. I was praising that last video. And then I also mentioned this in the last video. We had this bear div that gave me increased trepidation for bullish continuation. So I didn't end up buying the highs here or the breakout. I just waited and bought down here. Just a very confusing time. And lastly, on ETH BTC, another decent metric for just measuring retail DeFi interest. If there's money pouring into DeFi stuff stupidly, you'd expect ETH to outperform BTC. And it's had this growing bear div that never wanted to really retrace, and it looks like it finally has. I think it's inevitable we eventually hit 05. We're not going to hit it anytime soon. I think post-September, completely possible. December, January, completely possible. I think right now this is going to need some time to reset, let the MAs catch up. I mean, it's coming off a 2-year bear trend. It's going to take some time to gather steam again. I like consolidation anywhere around this VPVR level. The previous diamond reversal failure, anywhere in that zone is fine. If this drops below 025, then it's game over, but I don't think that's going to happen unless there's some massive DeFi deleveraging. All right, that's all I have for this one. A lot of wait and see, a lot of waiting games, which is good. No trade is a trade, people. No trade is a trade. Everything you do is a trade. Walking down the sidewalk is a trade. You could have taken public transportation. You could have taken a car. You could have had your friend take you somewhere. Everything is a trade, everything you do, including not trading, watching, waiting, being a jaguar in the tree, or whatever metaphor you want to use. Like, dislike, comment, share, subscribe, hit me up on Twitter, and happy trading.